viewers, welcome back to the channel. So I'm back with another market outlook trading video. Apologies that I didn't actually record this video yesterday because I was sick. But nonetheless, I'm taking the time on a Monday right now to record this market outlook video for you. Now, if you are in our Telegram channel, you will know that last week was a very difficult week. Okay, so we actually gave back some of our gains. So we gave back about 48 pips and 98 points because we traded NZDUSD. Now, it's a very difficult week, and before I move on to the market outlook for this week, what I want to do is I want to show you why the market was so weepy. Okay, the first reason is the conferences, which I've already talked about in the previous market outlook video, but there's actually one more reason that I didn't actually want to share with you all because I do not know if you guys actually understand or whether you guys have any experience with trading options. Personally, I do have some experience trading options and I do understand how options work. But this is another reason why the market was very weepy last week. So today is the 19th of July, and if you were to look at the options expiry calendar, which was last week, okay, let's look at last week, which was the 16th of July. You can see that last week there was the options expiry. Okay, so for this reason, what happens is that the market tends to be very weepy just before the options expire because it means the difference between expiring in the money and out of the money. Okay, again, if you are new to options, you do not understand these terms, it's totally fine. But if let's say you have some understanding of what it means that an instrument expires in the money or out of the money, then you will understand that the reason why the market is very weepy is because if price just close one tick below the spot price, or rather the strike price rather, then the money will expire out of the money. So that's where people who bought options will lose money. That's the reason why the market was fighting just to keep the price above or below a certain level. Okay, so now that we have gotten the options expiry out of the way, okay, this week, right, I'm going to look at the Forex calendar, and I have bad news again for you, okay, because you can see that this week on Thursday, what we have is we have the ECB, which is another press conference. Okay, so I've always said this many times, okay, I will repeat it one more time. Okay, press conferences are bad weeks to trade. Okay, this is a bad week to trade because press conferences is where the market doesn't know what's going to be said during the conference, and therefore the big institutional players are not going to go in before the market, or rather before the conference. Okay, so they always enter after the conference. So for this reason, I do expect the market to be range bound on Monday, Tuesday, Wednesday, and Thursday. Okay, until after this event, then it will be pretty clear. Okay, so if you really want my best advice for this week, my best advice would be to stay out. Okay, that's the best way to trade it. Just stay out until Thursday. Okay, but I understand that most of you want to trade, so we will still try to send signals, but we probably try to focus on the better quality signals. Okay, so that's it for this Forex Factory Economic Outlook, right? Just be careful about ECB. Now, what I'm going to do is I'm going to go into the charts and show you the key levels and the bias. Now, as always, I'll be using the MPE day trading guide that I've prepared for you. Okay, if you're a new Telegram subscriber or you're a new YouTube subscriber or you haven't watched our YouTube videos before, please hit the subscribe button, right? Please go grab this free day trading guide, which is found in the description down below. Okay, it's totally free. Just input your email and our email autoresponder series will send it to you. Okay, so just check this out. And basically, I'll be analyzing the market condition, the price level, and the entry trigger. Okay, entry trigger, if I see any, then I'll show you. If not, please join us on Telegram. Again, the link is in the description, because if my team sees any trades, then we'll send it out as a signal. Okay, no guarantees that we'll make money this week. Okay, this is how a signal looks like, but we'll do our best, and net, if you follow us in the long run, you are going to make money. Okay, assuming that you apply proper risk management, of course. Now, with that being said, let's move into the charts. Now, right here is DXY. DXY stands for dollar index. Now, DXY is still bullish. Okay, the market condition is still bullish because we have a high here, a low, a higher high, higher low. And I can see that the lows are actually getting higher. You look at this low, and this low. The lows are getting higher and the lows are not being violated. Now, For this reason, I still think that dollar is bullish, except that we are right smack into resistance at this moment. Okay, so I do expect that price will retrace a little bit, okay, and then I'll look for support here if you want to buy. Now, anyway, most of you won't be trading directly into DXY, so just be careful, right? Because DXY is at close to resistance right now, so that means currency pairs like euro dollar, pound dollar, Aussie dollar might actually, start going higher, right? Because if Aussie dollar is or rather DXY is retracing downwards, that means it's weakening. That means that euro dollar, pound dollar, and Aussie dollar is going to appreciate slightly. Okay, so just be careful of this level. And of course, if this level is broken, then we have the recent high right here. Now let's go on to euro dollar. Euro dollar is still bearish. Okay, previously in my market outlook video, I did say that okay, perhaps we could get a reversal, but true enough, we didn't get it. The trend is still down. Okay, we have low, high, lower low, lower high, lower low, lower high, lower low. Okay, so bearish market condition. Okay, we're still looking to sell. Now you can see that this resistance is holding. If you will just look back right here, you can see that this resistance was holding and this was support, and right here on Thursday, or rather sorry, this is Friday, this is Monday because the market is already open. So on Friday, price rejected this level and started selling down. Okay, so this level here is valid resistance. Okay, in fact, actually, if you were to sell now, I think the risk to reward will probably still make sense. Okay, let's just check it out. Okay, something like this, okay, it's still a good trade setup because we get a risk to reward of 1:1.6. Okay, remember, MPE, market condition bearish, P for price level, which is right here. In fact, if you were to look here, it's also supported previously. And the last thing that we need is a price action candlestick pattern, which I've explained in the free day trading guide right over here. Okay, it's actually this one is not really a good candlestick pattern. This one is, I would say, is somewhat almost like a piercing candle, but it's not really, because a piercing candle have to close like more than half of the body, or if you want a high probability one, will be 3/4 of the body of this prior candle. Okay, we don't see that, but nonetheless, this is looking bearish. So I still think it's a good setup, and you can look to short this if you want to trade this MPE trading strategy and you trade on the daily time frame. Okay, if you want the lower time frame trades like the H4 or the H1, then that's the kind of signals that we send in our Telegram channel. So make sure you join us over there, because that's where we do more short-term trades, which I think more of you actually like, because you guys don't like to wait, like 5 days, 2 weeks, just to hit your take profit, or just to find out if you made money or lose money. Okay, so make sure you join us there. Now moving on to pound dollar. Okay, pound dollar market condition is still bearish, except that we are in a range bound. Okay, it's bearish because we have low, high, lower low, lower high, lower low. However, it's quite evident that we are in a range. Okay, this is a box. Okay, so what a range means is that price is bouncing from support to resistance, resistance to support, and you can see that it's happening right over here. Okay, this is the entire zone, and right now price is right smack at support. Now, I don't recommend that you trade pound dollar, because even if this level is broken, there is a lower level right here. Okay, so the support, it's quite close, and by the time you get a candlestick pattern that confirms the break of this level, chances are your candle is going to be somewhere here. Okay, it's going to be in the middle of the range, and by the time you chase the trade, you are actually selling right into support. Okay, so for this reason, I don't recommend that you trade this currency pair. I don't recommend that you buy off support, right? Even though this is a range, because the market condition is bearish. So ideally, in a bearish market condition, you want to be selling. So you want to be selling right over here, and not buying counter trend trades like here and hoping that this range holds. Okay, I would prefer for you to wait at this level 1.39, look for a candlestick pattern, and then you take the short down. And if this level breaks, then you can target this level. That's how I would prefer to trade it. Now moving on to dollar franc. Dollar franc is a bit tricky, okay, because this one is very tricky, because you have a high here, you have a low, you have a high, and this low right here, if you were just to draw a line right here, you can see that price did make a lower low, okay? However, you can see that price didn't really close below the low, okay? This candle right here, it barely closed below the low of this swing low, but it didn't sustain the break, okay? What do I mean? I mean that price closed below and then it went back above, and you can see right here, this right here is actually a bear trap, okay? So it was a trap to get the bears. So bears who shorted somewhere here on the breakout, they would have lost money. So it's very tricky right now, okay? It could be bullish, it could be bearish, okay? If you were to look at this as a high, this is a low, and this is a lower high, this will be a lower low, and you would say that, hey, this is a bearish market environment. But if you were to look at this entire big up movement, and you were to say that this low right here is not broken yet, or at least the close price didn't really break this level, then you would say that it's still bullish. So for this reason, I would say that this is not clear, okay? So I would just want to highlight that this level is important, and this level right here is very important as well, because what we see is probably a head and shoulders in the making. This is the left shoulder, this is the head, and this is the right shoulder. So right now price is in the middle of nowhere, okay? If you were to sell here, you are selling in the middle of nowhere, and if you were to buy here, you are buying in the middle of nowhere, okay? And remember, we have ECB happening this week, so it's probably going to, you know, just go up, go down, go up, go down, something like that, and go nowhere. So please be careful, take note of this level. Even if this level is broken, we still have this upper resistance level. So please do not just buy this breakout, because if you were to buy here, you might be buying into resistance right over here. Okay, so just be very careful with this currency pair. I don't recommend that you trade this. Now, before I move on to Aussie dollar, right, appreciate if you could do me a small favor, hit the thumbs up button, right? It really helps this channel to grow, right? If you are new and you have not yet joined us on Telegram or not yet subscribed to this channel, right, please do that as well, because we have many trading videos on this channel which will help you become a better trader, okay? I upload this market outlook trading video every single week or so that you are able to better trade the market and you know of the key levels that you should be watching out for. Now, back to Aussie dollar. This is Aussie dollar. Aussie dollar market condition is clearly bearish, okay? You look at the low, high, lower low, lower high, lower low, lower high, lower low. Okay, it's definitely bearish. There's no reason why you should be saying that this is bullish, okay? At least on the daily time frame. Now, price on Friday has broken below this entire zone of support. Okay, it's not difficult to see that this is entire zone of support. This was support, 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 and it was broken. In fact, on Friday, it did a nasty whip. Okay, it whipped up to trap those people who say that you know, this level is not yet broken, right? People who tried to buy when price was above this level. Okay, it actually resulted in a big whip, and right now price is back down below. So what I'm saying is that this is resistance, and this resistance is probably going to hold, but right now price is in the middle of nowhere again, right? Because the next level is somewhere here, okay, 0.7337, and right now price is here, and price actually gap down. So I'm expecting price to you know, recover a bit, to close this gap, retrace higher, look for a candlestick pattern here, and then if we get it, then we can short it down, okay? So that's how I see price for this, but please stick to selling for Aussie dollar. Please do not buy, okay, because it's in a clear downtrend, okay? I've always said this, and I'll say it one more time. If you are struggling to turn a profit in trading, please stick to with the trend trade setups like this, okay? Do not trade counter trend, because it doesn't make sense, okay? If you can't make money with the trend, then you obviously can't make money trading against the trend. So just stick to the bearish side for Aussie dollar. Kiwi dollar, it's still ranging, okay? Market condition is still bearish, down, okay? This is low, high, lower, low. Okay, so it's bearish. However, same like dollar franc, we are in a box. Okay, this is a range, and price is going nowhere actually. And I drew this descending trend line to show that this descending trend line is acting like a resistance as well, and it's kind of like squeezing the bulls out. Okay. However, if you watch my previous videos where I talk about trading the pre-breakout structure, right, the structure within the structure trade setup, I don't see this pattern happening right here. Okay, I don't see a series of engulfing pattern. There is sort of an engulfing pattern here, but I don't really see an engulfing pattern here. Okay, so I don't see strong pressure to the downside, so I'm not very keen on trading this breakout or trading the pre-breakout. Okay, what a pre-breakout means is you trade in here hoping that price breaks down. Okay, that's what a pre-breakout structure means. Now, if you have not yet watched that video, please check it out, because there's a lot of value in that video, and that's experience which I've accumulated trading more than 17 years or so. Okay, in fact, I lost track. But bottom line is, this structure right here is not very convincing that it will break down, right? I believe that it will just, you know, to and flow, to and flow, to and flow. So price right now is trapped within this support and this resistance. I don't recommend that you trade this. If you really want to trade this, then wait for this level 0.6930 to be broken first. Then you can look for a trade setup and sell it down. Okay, that's how I would recommend you trade this currency pair. Now moving on to dollar CAD. Dollar CAD is clearer. This is the kind of trade setups that I recommend that you trade. This is the high, this is the low, higher high, higher low. So we are in a bullish environment. Now price is on the high side right now, because you can see that right now the market has just opened. It's opening right smack into resistance, which is the previous swing high right here, and you can see that this was the previous support. Okay, so support turned into resistance right here, and right now is at resistance. Now, do be patient, right? I do expect price to retrace a bit, and you know, if it retraces downwards somewhere back into this support, and you know, with confluence with this ascending trend line, then this will be a good setup. Okay, again, I do not know if we will get this setup or not, whether price will actually retrace down, but I urge you, right, please be patient. Please do not buy into resistance right here. Do not chase the market. Be patient and wait for price to come back down, so that you can buy it at a good price and swing it back up. Okay, so at least this is for the daily time frame. Okay, if you want to trade a H4, H1 is a different story, but on the daily time frame, I will recommend that you wait for price to retrace back down lower, find support here, and then look for a candlestick pattern. Okay, this is probably the highest probability setup that you can trade, because you can see previously price broke out, retraced down nicely, and this support held. So this is a very strong level, and right now if price were to retrace, you will have confluence with the ascending trend line. So it's a very, very strong setup. Now moving on to dollar yen. Dollar yen, it's pretty tricky. Okay, previously I drew this trend line. Okay, and I did say that this is resistance. However, if you were to look at the current box right here, you can see that price is just consolidating against ranging. Okay, I would say that the market condition is more bearish, because you have a high, low, higher high, higher low, higher high, and then after that this higher low right here was violated. Okay, in fact we have a very big close down, sell down, candle closes below this low. Okay, so I would say that the market condition has already changed to bearish. However, we are in this box. Okay, this is the support, this is the resistance. Price is doing nothing, it's just consolidating between the support and resistance. So I would recommend you to wait for price to come up here. Okay, just retrace higher, look for a candlestick pattern, and then you short it down. Okay, I don't recommend that you buy here, because this is more like counter trend, and if you were to sell here, you will have confluence with the ascending trend line, or rather this broken ascending trend line. So this is what I would prefer you do. Right, I don't recommend that you start buying here, because price might just start breaking down like this. Okay, I do not know, but I want to highlight that this is support and this is resistance. Okay, the levels are pretty clear. You just need to be patient. Gold. Okay, gold is looking pretty good. Okay, gold is in an uptrend, because if you were to switch into the line chart, which is clearer, you can see that this is a high, low, higher high, higher low, higher high. Okay, this entire movement up is a uptrend, and if you were to see this as a first bottom and second bottom, and this is the neckline, then this double bottom is confirmed as well. So that is why it's bullish. So you should be looking to buy. Now, the beauty of this setup is that we have an ascending trend line, and right now price is right smack at the support, or rather this ascending trend line. And if you were to switch back to the line chart and just plot this high right here, okay, and maybe plot this one right here as well, okay, and you switch it back to the candlestick chart, you can see that price is at support right now, okay. So the market condition is bullish, the price level, it's or rather the support is this entire zone that I've just mapped out. Now the last thing that we need is we need a price action candlestick pattern, which I've explained on the day trading guide, okay, which I've already created the guide for you, okay. Again, if you are new and you don't understand what a price action candlestick is, this day trading guide has a section that is dedicated to this portion, right? What is the candlestick pattern, and we give you the candlestick pattern cheat sheet, which will be super helpful for you, okay. So please go grab that. But anyway, what we are waiting for is just waiting for a confirmation candlestick pattern here. If we get it, then this will be a very good trade setup, okay. This will probably be the best trading setup that you can focus on for this week, because you have the ascending trend line, you have strong levels, and you have the market condition with you, okay. So just be patient, wait for a candlestick pattern, okay. Just be mindful when you are trading gold that the position size is different, the lot size is different. So please, you know, go to Google and use something like what I call a position size calculator to calculate the correct position size, okay. Do not trade the same position size, because the position size is bigger. What happens is that a lot of people trade gold and they don't realize that the position size is different, and end up they blow their account. And that is the reason why my team doesn't send out gold signals, okay, because it has happened to quite a number of you before, and we don't want to be responsible for you blowing your account. So that's why we don't send out gold signals. So if you want to trade this, just be very careful, okay. It's very important that you understand this pointer, that the position size is different, okay. So please do not trade the same size that you do compared to currencies. Now moving on to Euro Pound. Okay, Euro Pound hasn't been doing much. Okay, in fact, last week we thought that Euro Pound broke down of this level, but it didn't actually. Okay, it turned out to be a bear trap, and right now our price has just opened right smack in the resistance. Okay, so this right here is not a currency pair that I recommend that you trade, because you can see that it's very choppy. It goes up, go down, go up, go down. It's very choppy. Okay, but nonetheless, the market condition is bearish because you have a low, high, lower low, and right now price is right smack at our resistance. Now if you really want to take a bet, then it's possible that you enter in right now, because right now price is right smack at resistance, and you just take a bet that price comes here, okay. This is kind of like betting, right? As long as you can manage your risk and you do something like this. Okay, let me just show you. Let's say you were to short now, and you just, you know, just put in a stop loss of like 20 pips, okay, just bet, okay. This is really like betting. It's not really trading, because there is no confirmation yet. But if you can accept the risk that, okay, you are going to risk 20 pips to potentially make 50 pips, and you think that the risk to reward is good, okay, and you're willing to risk, you know, $100, $500, whatever it is, then you can actually take this trade, because this is resistance and this is support. So if you want to bet that this is holding, this will hold and price will revert back to here, you can do it, okay. Though I don't recommend that you trade this or you take this kind of trades, especially if you are a beginner. But nonetheless, price is at resistance now. I do expect price to sell down, okay. Right now we don't have a candlestick pattern, because it's just the morning, okay. It's the Asia session, and the candle has just started. So I do not know if price will end up closing like that, okay, or you know, it starts selling, okay. I do not know, but I just want to highlight that price is at resistance right now, and it's still bearish, okay. So this level is still valid, and of course if this level is broken, then right here, okay. But this level, it's proving to be a tough nut to crack, and it hasn't really broken down. So if you sell here, make sure you take some profits when price comes to this level, okay. So NZDUSD, we actually lost money trading NZDUSD last week, okay, because NZDUSD started selling down. We bought somewhere here, I believe, hoping that price goes up, because this is a long-term uptrend. Okay, you can see that high, low, higher high, higher low, higher high, higher low, higher high. Okay, now price has broken this trend line, and more importantly, on Friday, you can see that price actually broke it and retested it, okay. So for this reason, I would say that the market condition is more bearish, and I expect price to retrace higher and sell back down, okay. So right now what I'm saying is that this is a left shoulder, this is the head, and potentially this could be the right shoulder with a confluence of the trend line, okay, or it could be a double top. Okay, I do not know how high price would retrace, but I want to highlight that this trend line is already broken, and I do expect price to start selling down and correct a bit because it's been going up for some time. So perhaps we get a deeper correction, right, a deeper dip, so that you can accumulate stocks at a better price. Okay, so just be mindful of this level. Right now price is very close to support, which was given by this high and this this spike low right here. So please do not sell into support. Okay, it's already probably too late to be selling right now. Just be patient. I don't recommend that you buy again because the uptrend has been broken. Okay, I do not really see a confirmation of the downtrend, but I just want to highlight that this trend line is broken and there is a potential double top or head and shoulders pattern in the making. Now let's end off this video with pound yen. Pound yen market condition is bearish because you have a low, high, lower low, lower high. Okay, right now price is smack at support, right? There is no conclusion of whether this level is broken. Okay, so I won't say much about this because right now it's not clear. But one thing is clear is that price is bearish and you want to be selling. Now the only question is, should you be selling when price breaks here, or should you wait for price to go up? Again, I do not know because the candlestick pattern, it's not confirmed yet, but please do not buy at this level, right? If you really want to sell, just wait for price to come here, look for a candlestick pattern here, and then you sell it down. When price comes here, take some profit. Better still, if price breaks here, then you're probably looking at the recent low right here as your next take profit. Now if this level is broken, what you can do is you can do a breakout trade. Now just be careful if you do a breakout trade, because if your confirmation comes somewhere here, let's say the candle close here and end up your stop loss is something like that, then the risk to reward will not make sense. Okay, so please be careful if you are trading the breakout. Remember that you need a risk to reward of at least 1:1.5. okay, if not, it just doesn't make sense. Okay, you shouldn't be risking $1 to make 64 cents. Okay, it's a very bad risk to reward, and I personally recommend that you stick to at least 1:1.5. okay, so that's it for this market outlook video, right? Please go grab this day trading guide if you have not already done so. Okay, just a gentle reminder that we have ECB, so it's not going to be an easy week. Chances are, if you do not watch this video, most people who do not watch this video, rather, they're probably going to chase after the market and they're going to get whipped out and lose money. Okay, we'll try our best to have a profitable week, but no guarantees. Okay, that's why risk management is number one. Okay, please do not risk more than 3%. Okay, we are not, we don't have a crystal ball. We don't get it right all the time. We do have losing weeks. We do have losing months, in fact. Okay, so please manage your risk, because that's something that we cannot do for you. Okay, you are responsible for managing your risk. So I hope that you really manage your risk well, right? That you understand that trading is not about winning 100% of the time. It's all about risk management. Okay, if not, thanks for watching, right? I hope that you trade safe, and I'll see you in the Telegram channel.